Happy Friday, traders. It is 8:03 a.m. Chicago time. Another dark, rainy day here in Chicago. Not fun at all. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have some allocation to risk, not that crazy. Crude is leading the pack, up $1.86. Crude is trading 67.40. Tons and tons of chatter on the news wires this morning with the OPEC meeting and the fact that it looks like they are focusing on compliance and no increase in production. No increase in production, lower supply, prices move up. Economics 101. Overall, it looks like all is good in OPEC land, and as a result, we see a pop in crude, almost 3% this morning. Following that, it's the Euro stocks, the Euro stocks 50, which represent 50 large caps across Europe, up 0.88%, and then the Dow is up 130 points. The SPOO, the S&P minis, up 14 and a quarter. The laggards today, the U.S. Treasury bond, the yen, the dollar, the bund, the 10-year note, and gold. So clearly allocations to risk this morning. We are trading in the stem of yesterday's drop in the S&P, still in range. We'll go over that in a minute. This morning, other than the continuous chatter on OPEC and oil, there isn't all that much to talk about as far as what could interrupt our auction today. We have U.S. Services PMI prelim. This is not a high-tier number at 8:45 Central, 9:45 Eastern, expecting 56.5 for June. And then, of course, Baker Hughes later, which really hasn't moved us at all. Nothing else on deck today, so it's you, me, and the news trading the markets. So that's where we stand. As far as what was expected yesterday, here are the three main ideas, and you got to love those colors. The three main scenarios. So yesterday we played out scenario 3. We just immediately dropped out of range, just like you see the cyan color. Dropped out of range, and we went all the way down to 27.53 and a quarter to balance out. Was looking for a test of around 27.50 and for it to hold steady into the close. That's pretty much what it did. What we didn't get on scenario 3, unfortunately, which would have been nice to be able to catch, is the pop up towards the point of control for a short. Now, scenario 1 and 3 were sellers, but scenario 3 took the win because it was more. It had more of a driving nature. Here's what actually happened. That looks noisy. I'm just switching periodicity here so we can see a little more detail. Kill the zigzags. You could see just ba-bow. This was actually all the way down here. This was actually an open auction in range with a strong downward skew. It did not quite have a driving behavior. How do we see that? We see these tails, these wicks on these bars, back and forth, much more obvious on a 2-tick Renko. And then once it broke through the 65.50, it started to spill pretty good. And here we are down at the 53. That's the area that I discussed that we were likely to test. Once we get to the 53, we stabilize and we start to move towards mid right there. Trades at 60 and a half, and it pushes to 63 and a half before it starts to rotate back down. We broke the IB low right after putting it in. And so we have range extension down. We have a normal day. And then it sat sideways for a while before it decided to continue lower down to 46 and a quarter. Remember, 46 and a quarter, it actually got to 47, 46 and a quarter, 45 half. Key support areas below. The way this is shaping up to me, unless we see a real show by the buyers, the way this is setting up is for 27.23 MC point of control from February 2nd till now, the most traded price. Here's what that looks like. This is the pattern that I'm speaking of. We have a market that has popped up, pulled back to 46 and a quarter. Remember, 45 half, 46 and a quarter, and then is doing this. We're trading on the high side of yesterday's range this morning. So we'll see if this pivot high gets taken out, this tiny little nub of a day that we had. We'll see if we can take out this 78 and a quarter. If we cannot take out the 78 and a quarter, then we are likely to test the MC point of control, this black line right here, all the way through. That's, you can see that the volume on this one, the volume histogram on this one is very high. And that is the big magnet of the area. That price is 27.75. So call it 27.23. That's the area down below. If we start to spill over, it's about 40 points away currently. But if we don't hold on to these higher prices and push through the 27.80, that's the big over underline that we left behind Monday. If we don't get through that 27.80, then we're likely to see that 27.23 barring news. Okay, so that's how things are shaping up. That's how things are shaping up right now. Let me double check that POC. Hang on, let's pull it up. Let's see. Yep, 27.2375 right there. 27.2375. In the old contract is 27.20, but the premium is 3.75 for September over June, so that's correct. Okay, so that's where we ended up yesterday. In the overnight session, here's what we've done in the overnight. We have basically just simply pushed higher and higher and higher. Sounds like an 80s pop song, but this is where we stand. We opened up and we tested a little bit below, and the trend is solidly up. We have a short covering type of profile. We have a low volume node at 27.59, and the market is strongly above the mid. VWAP is trading around the point of control. We have a weak high. Look at how blunt this high is up here. We have a weak high, seeing strong prints all the way up to the high of the day, seeing strong delta at the top of the day as well. It's likely to continue higher this morning. We'll see how that works out. But overall, the overnight session has had okay volume, 149,000. 149,000 versus 110,000. And really good range, 27.68 and a quarter down to 27.45. 27.49 and a quarter. So pretty good range, decent volume, and buyers in control this morning. Again, risk on. So what do we expect today? Before we get into that, we are going to take a minute and hit the like button because it's Like Friday. Now, we didn't have Like Friday last week, so you better hit the button a lot. Well, actually, no, only hit it once, because if you hit it more than that, it just cancels out what you did. But please log into your YouTube account and hit the like button if you can. The second thing I wanted to tell you about today is this very important event taking place on Tuesday at 3 p.m. Central, 4 p.m. Eastern. 3 p.m. Central, 4 p.m. Eastern. Please go to ft71.com/spotlight Aaron. I'm doing a trader spotlight with the host of the famous Chat with Traders program podcast. Aaron Fifield is a great interviewer. Is a great interviewer who's interviewed almost 200 of some of the greatest traders, fund managers, crypto traders, and so on. And he's a trader himself. So we're going to have him on Tuesday at 4 p.m. Eastern, 3 p.m. Central. Please register for that. So show him some support. We're going to pick his brains about what he has learned from all of these interviews. So please join that. It's a really interesting. It should be a really interesting segment. Back to business. What are we expecting today? After dilly-dallying and going sideways for days on end, look at this profile, this composite. As we extend it lower, you can see it building the MC down below, and we're trading a little bit higher. Now, the MC point of control for this region is 27.75.50, and that is the magnet for today. Okay, that's where we expect prices to go at some point today. The primary scenario for me today, given the setup that we're in, open auction in range, expecting a fairly quiet auction. I'm looking for a drift back down to 27.63 or so. I'm looking for a pop through the overnight high, consolidate, and I'm looking for eventually a test of the MC point of control today. It's Friday, so ranges are likely to be a little bit smaller than usual. But that's the primary scenario. The secondary scenario is very often the opposite. Secondary scenario, we're looking for a market that starts pushing higher immediately, consolidates at the prior point of control, and then falls back into the range and starts making its way down into the 61.75, and then potentially taking back a lot of what it did yesterday for the bounce back. So I'm looking for a higher high, higher low, but for it to stay within range. That's scenario 2 for today. I'll let you come up with your own scenario 3, 4, and 5. But why these so opposite? They look almost exactly the opposite. This is like a win-loss ratio, win-loss percent graph of someone's trades. They're the opposite because we're in balance. They are the opposite because we have been in this region for some time and we have tested these prices quite thoroughly. We cannot seem to find consensus. How do I know that we cannot seem to find consensus? Just look at the profiles to the left. Many multi-distribution profiles. Many multi-distribution profiles. We've been putting in double distributions and triple distributions a lot. This is multi-distribution profiles simply say that the market's willing to participate with volume at a large on a large range at a large set of prices. So there's a very difficult it's having a very difficult time finding consensus. So what we're getting, added to the fact that we had rollover and expiration last week, which is always awful. We have a market that is consistently that moves with delta. So price moves with delta. So we have price and delta moving in the same direction. But later in the day, we tend to have a disparity between the delta and price. And it seems to just not do anything with conviction. So to me, if it's not able to test lower and pop up, then it's likely to test higher and bounce lower. And remember what I said, this whole thing looks like a setup, an inverted cup and handle kind of formation if you're into formations. Yesterday, it's really well, it was really well defended at the low, but yesterday could have spilled in and through the 27.45.50 key support area in this area, but it did look very bearish yesterday, and we're higher today. I'm expecting us to walk our way back just as much as pushing up, and I simply know that the target above 75.50, the key price, the key over underline is right here at 27.80. We take that out, and that somewhat cancels or reduces the chances of this 45.50 being tested, and we're likely to start turning up to 27.96. So that's how things are looking today. It is Friday, so not only do I need you to hit the like button, but I also need you to be very, very cautious with the risk that you take today, because Friday is the day when people reach the end of the week. They feel like they haven't done much with their week if it was a rough week, and they start to swing for the fences, putting on a lot more risk and just looking for trades, going out and fishing for trades. Don't fish for trades. Make a decision and let the market come to you. Please learn to do that. If you see that work just a few times, those of you who were in the impromptu on Wednesday at Convergence saw how we can't just jump in there just because we think something's going to happen. We need to wait for the market to really work its way and give us the information we need to engage with it based on the probability that we will get paid more than we were likely to get our stop hit. Okay. Anyway, I'll leave you with that. I don't want to lecture any further, but really Fridays are the big thing. Again, I would really appreciate it if you would just register for this event, ft71.com/spotlight Aaron, and I'll catch you there. Good luck.